Good morning. Welcome to Entrepreneur Country TV. I know you've been waiting for this all weekend long. Once again, we're going to give you some thoughts from last week, the week in review, tie a couple of ideas together for you, and have Amit Pao, my partner in the Ariadne Capital Entrepreneurs Fund, speak to you about a couple of anecdotes from the industry. I wanted to connect a couple of things for you between angel investing and Google paying tax, for example. In 2014, one of my acquaintances recently told me that in the United Kingdom, due to some of the tax incentives like SES and EIS, UK angel investors put 1.8 billion sterling into startups and other angel investment opportunities. This is terrific. But what's interesting to note is that that dropped off to less than 300 million in the same year, 2014, in terms of venture funding. And his sources are good sources. It's the BVCA, HMRC, and so forth. Now, why have we had that drop off of 6 times less venture funding? If angel investors who are giving their own money are willing to back early stage entrepreneurs, why is the venture industry so unwilling then to back the next level of growth in startups and fast-growing technology industries? Well, one reason for this is that the pensions industry in the United Kingdom has simply not backed venture in the way as, say, the US pensions industry, which more or less has driven the venture capital growth of the industry over the past 30, 40 years. But here's the next point that I want to make. You probably have caught that Google has been asked to pay some back taxes recently. You could argue that 134 million sterling is not a lot of money for Google. But the interesting thing to note is that if you understand US corporation tax, these tech firms keep money offshore. They don't bring it into the US, whether it's to avoid paying corporation tax or whatever, but it provides us with an opportunity. If we want to think creatively about how to get that money offshore from the US, working to further our own agenda in Entrepreneur Country, in the United Kingdom, let's give those same treasures of large US multinationals a laundry list of ways that they can participate as good citizens in the building of the UK economy and the building of Entrepreneur Country. Instead of just asking them to put it into the treasury, why not give them a long list of scholarships and grants and programs and back venture capital and do more acquisitions? Sure, US technology firms buy a lot of UK-based technology startups, but there's an even greater opportunity for them to be an active citizen in the UK than occasionally acquiring companies. These are the kinds of solutions that we need to look at. Wherever there's a stick, there's a better carrot. Wherever there's a disincentive, there's a better incentive. If we want to optimize for certain kinds of behavior, we have to take out a clean sheet of paper and ask ourselves, what's the best way to get to that outcome? Now, many of you will remember Amit Pao, my partner in the Ariadne Capital Entrepreneurs Fund, from the Thanksgiving edition, where he gave some insights into some of the work that we had been doing at that time. He's here again this morning on Entrepreneur Country TV to talk about some insights from the industry that he knows extremely well, telecoms, communications. So this morning, you're privileged to hear from Amit Pao on Entrepreneur Country TV.
Last week, a number of you may have noticed WhatsApp made an announcement that they're scrapping their subscription fee. If we look at the journey and the rapid rise of WhatsApp, how they've transitioned and the impact on the comms industry, in less than 5 years, WhatsApp have captured over 900 million consumers. They started from a simple messaging application and now expanded their business to an all-encompassing platform that allows you to do messaging, voice calls, mobile payments, remittance. Now, what is the impact of this rapidly growing business, WhatsApp, to the communications industry? Firstly, by the end of Q3 2015, WhatsApp generated 50% more messaging traffic than the whole of the mobile communications industry combined. That is phenomenal, combined especially with the fact that they only have 33 engineering team members. So at a unit economics level, they're further ahead than their peer group. Equally, from a revenue impact perspective, WhatsApp destroyed $50 billion worth of revenue for the mobile communications industry in 2015. Fast forward to 2018, they will eliminate $130 billion of messaging revenue for the mobile phone industry. In summary, WhatsApp's a perfect example of a team that's transitioned to an ecosystem economics firm, shifting towards a platform-centric company, delivering exponential growth and building a compelling value proposition for its consumers.
Now, unless you were asleep last week, you will know in the Swiss village of Davos that world leaders came together once again for the World Economic Forum. And full disclosure, I have to admit, I've been there 3 times myself, but I don't go anymore. And here's how I feel whenever I watch the coverage of Davos and the World Economic Forum. It feels like there's a disproportionately high number of financiers that go and a disproportionately low number of entrepreneurs that appear. And what we believe and what I believe is that financiers and the entire financial services industry is a service industry to industry. That growth that everybody wants to talk about, where is it in Davos, is actually driven in a very mundane way by the hard work of men and women driving their own business. It's industry. And financial services, in all its glory in all of the big institutions, needs to make themselves a service industry to industry. That's how we get out of this feeling that growth is really a zero-sum game, that it's some sort of quantitative easing, interest rate, and so forth, rather than an ability for entrepreneurs, business people, family businesses, etc., to create growth that can lift people up and to create an expanding economy. We're doing our bit at Entrepreneur Country by creating a new asset class. We're testing a hypothesis that we believe behavior will be different when people have an asset, which is the value of their data inside of Entrepreneur Country. So today, if you go to Entrepreneur Country Global and register to become a citizen, you will see that we have established the value of your data as an asset of the individual. We've given property rights to data inside of Entrepreneur Country. Ask you to check that out. Ask you to think about the emergence of a new type of GDP, of a new type of revenue being built off of the value of your assets that we are test piloting inside of Entrepreneur Country. That brings us to the end of Entrepreneur Country TV Edition 15. Thank you so much for tuning in. Please share this with your network, and I'll see you next week.